The Monetary Policy Committee of the Central Bank of Nigeria maintains a hold on monetary policy rates at 13.5%. Also, other parameters such as cash reserve ratio, liquidity ratio, and asymmetric corridor are equally held constant.
In consideration of the foregoing, the committee decided unanimously by a vote of all members present to retain monetary policy rate at 13.5% and hold all other policy parameters constant. Decision was informed by the conviction of members that key macroeconomic indicators are trending in the right direction and because of the lag in the effect of policy actions on output. Consequently, the MPAC unanimously voted 1. Retain MPR at 13.5%, 2. Retain the asymmetric corridor at plus 200 and minus 500 basis points around the MPR, 3. Retain the CRR at 22.5%, and 4. Retain the liquidity ratio at 30%.
Oh, interesting. Godwin Emefiele there. Macroeconomic strategist with AfriInvest West Africa, Adedayo Bakare, joins me now in the studio to make more sense of this decision by the Apex Bank and, of course, the Monetary Policy Committee. Thank you very much for your time, Adedayo. First, I want us to start this week. The ministerial list is finally out. How did that hit you? How did it come to you?
Okay, I mean, it's the much-awaited ministerial list. For us, in our view, it was quite underwhelming. Given that, a lot of, we see a lot of the ministers in the former, in the last 4 years were returned. Also, we saw a lot of names that, a lot of familiar names, which, we all know their track record, mostly, previous governors who have now been nominated as ministers. We believe we did not have to wait for this long, the election held in February. And, we also had the inauguration of the administration in May. And, we're waiting till July to release these names. These are not, surprising people to see at all. And it's actually not inspiring any confidence in the administration based, on our initial thoughts. But it will be interesting to see, the kind of policies they will pursue. So for that, we're still holding out to see the kind of reform agenda the administration intends to pursue over the next 4 years. 43
of them, that's what we have. I was thinking that delay we had, investors' confidence and all of that, I think we should be getting over that at this time. That was what I was thinking. I don't know. Am I right?
Well, I mean, it depends, basically, you've seen weak investor confidence in the market since, even post the elections. And where you find that is in the equities market. The market is currently down year to date to around 11%. Year to date, all sectors, in the Nigerian Stock Exchange are losing, from industrial goods to consumer goods to banking, and that is because foreign investors no longer find, Nigerian equities attractive. So where they are playing in is actually the fixed income segment. And once foreign investors are playing in the fixed income segment instead of the equity segment, then that is an indictment on the state of your economy, on the state of the policy, on probably the lack of reforms by the current government. So I mean, with that in mind, you would have expected that the kind of ministers that will lead the country, or key ministries such as finance, agric, health, education, trade and investment. People want to see technocrats, people of immense experience over a long period of time. And those are the kind of people, the kind of profile that would actually, inspire confidence. For now, we do not know the cabinets of the nominees. So, we're still on the lookout for the ministers who are going to be in charge of some ministries to be able to know the kind of policies to expect. But currently, as things stand, it's really not inspiring confidence.
Okay, let's move on now. I want us to touch on security. That has also been one issue that has been on the headlines, looking at the shite issues, the shite and the crisis, the protests and all of that. And this is also affecting Nigeria one way or the other, because when we get to hear all of this news, investors tend to stay where they are and don't want to bring flight. Money will only come to where it's received and where it's receptive environment. Now, what do you think about security and our economy at this time?
Security is absolutely crucial, both for not just foreign investor confidence, but for domestic investors as well. And even in terms of mobility, for instance, in terms of the mobility of capital, which we've talked about, in terms of mobility of labor, you wouldn't want to go to somewhere is unsafe to work. Nobody would want to go there. What you find is that insecurity contributes to a lot of economic disruptions, and you find that affects GDP growth. It affects labor productivity as well. And the unfortunate part is, we've seen insecurity fester recently. So even all across regions in the country, you're seeing, one form of, insecurity or the other. In the Middle Belt, you find the, farmer and herdsmen clashes. In the Southwest, you see the riot of kidnapping. So it's actually very unsafe to travel to, across state lines. So all these things are not too good, both for foreign and domestic investment, and also for domestic activity. And what we've been saying, since last year, for instance, is because if you think of food prices, for instance, food prices have been on the increase for a very long time, and currently food inflation is around 13%, above 13%, which is very, very high. And what you find is that it's because in food producing regions of Nigeria, you find that insecurity is resulting into displacements of livestock, into not just displacement, but loss of livestock as well, and also agricultural output. Because once farmers and herdsmen are clashing, you find that there's a lot of disruptions to agricultural activities, and that has contributed to food price pressures. So it's actually something we need to resolve. Insecurity is key. We need to resolve it to not only to boost economic expansion, but also to improve the well-being of the people.
Indeed. Let's move on now to the big one, the MPC. Finally, what were you expecting?
Our expectations, we released our pre-MPC note on Friday, and we expected the CBN to hold all policy parameters at current levels, and it was good to see that that was what happened today.
So despite easing of inflation, that some analysts projected that maybe that would give a shift. You didn't think it was going to be a shift?
Absolutely, there has been a shift already. For over 2-3 years now, we've been of the opinion that actually the MPC and the monetary policy rate has actually lost its relevance, because you find that it's mainly very symbolic, and the MPC meeting is just a bi-monthly ritual currently. So what you find is that globally, in the US, in the Eurozone, all these advanced economies are transitioning to lower interest rates, right? And you find that even in emerging markets and frontier markets, central banks have also been easing. The central bank of, in South Africa, we saw an easing in July, for instance, by around 50 basis points. And so you find that also in markets like Nigeria as well, although the MPR has remained unchanged, what you see is that the CBN has actually been easing in the debt market. So this time around last year, you find that interest rates were high, yields on government securities, for instance, were high. But this year, you find that one-year treasury bills is just a little over 11%. So you see a situation where the CBN rather, has reduced the rate at which it conducts its auctions to actually manage liquidity. The results of the lower frequency of auctions is that there's more liquidity in the system. When there's more liquidity in the system, then you find that both banks and private investors are putting more money into the debt market, and the result is lower interest rates. So effectively, the CBN is actually easing. What has just happened is that the MPR has not moved significantly, right? What we had was just, 25, was it 50 basis points? Yeah, 50 basis points that we had in March, during the March meeting. Yeah. And really the effect of that, we're yet to really see the effect of that in the real economy, because basically you have two segments. You have the real economy, you have the financial sector. In the financial sector, you found that, easing is already in play. But in the real sector, you find that interest rates are still a bit sticky going downwards, and that is really because, not even because of the marginal cut in MPR. You also find that there are also several issues within even the economy in terms of the risk profile of the economy, the structural issues. and that is why banks have not, responded to the cut in NPR that we had in March.
Let's stay on that now. The CBN has been making moves to actually make these banks lend to the real sector. In all of these moves, it really shows that the bank is after creating jobs that we've been saying. Build the real sector, energize that sector, and make sure that jobs are created. What do you make of all of those moves at this time?
No, absolutely. The primary role of banks is financial intermediation. It's, collecting money from people and lending also, collecting money from economic agents. In this case, you have the households, you have the businesses, you have governments, and also extending credit to people who need it, to businesses who need it, to governments as well. And what you find in Nigeria is that financial intermediation is actually weak. If you measure it by at least credit to the private sector, to our GDP, it's actually very, very weak when you compare it with, say, a country like South Africa, which is a peer country. And also if you move further out of the continent and you go to Turkey, you go to, Brazil, India, you find that comparably Nigeria is not doing very, very well. And it's actually very good to see that the CBN takes this as a priority, that we need to lend to the real sector, because that is how we're going to achieve the kind of growth we want to see. But the issues are that the approach the CBN has taken, we've seen about 2 approaches, even 3 since the last MPC meeting, right? They've established a minimum for loan to deposit ratio at 60%. The maximum remains at 80%. You've seen the standing deposit facility window, the amount of money they can place with the CBN, which attracts interest, has been reduced from 7.5 billion to 2 billion now. And what that means is banks are being forced to look for other uses for their money, especially short-term liquidity. Also, you find that last week, for instance, the banks were prevented from subscribing to government securities, just in a bid to, force them to lend to the real economy. So you've seen all these steps taken. In our view, we do not agree that we need such a drastic measure or approach to, forcing banks to lend, because when you look at the economy entirely, the risk profile is very, very high, right? Growth has not expanded as we want. Consumer, spending is still very, very weak. And that is why if you look at the performance of the likes of Unilever, PZ, Nestle, for instance, which are, companies that sell products to everyday Nigerians, you find that their performance is not, very inspiring. Also, you find that even in the banking system, non-performing loans is currently high. The threshold is 5%, and non-performing loans is more than twice that. That is 11%. And so what that means is, if we continue to, force banks to lend, since we have very, very high credit risk in the economy, you could have an overshoot of your NPR ratio, and that means a reduction in capital buffers. Eventually, that will create further weakness, not just for the financial system, but for the overall economy. So we think that a more subtle, approach rather should be taken by the CBN. Similarly, the fiscal sector, that is the presidency, also has to contribute, because in the end, when you think in terms of risks to Nigerian businesses, it is the executive that is going to resolve that risk. The CBN is not really the agency in charge of creating an enabling environment for businesses in terms of fixing infrastructure, for instance, reducing the multiplicity of taxes, making it easier to conduct trade, moving goods from even the ports to the places of business, and even for those that want to export and import. All those things are with the federal government, and that is why even before we see banks, or Nigerian banks, lend to the real economy, the federal government really has to come and work on the risks in the economy.
Indeed, everybody has a role to play, the federal government and us. Now, let's look at also this move of reviving the agricultural sector. We've seen issues around cotton farmers, trying to empower them, the GINAs and all of that. We've also seen palm oil, that's also another sector that the central bank is trying to empower and revive, bring back to active life. We in this part of the world, we've been doing a lot of exports. That's what we've been doing, moving away our products and all of that. Even crude oil, that's what we do. Now, how do we strengthen production, even with all of these moves by the central bank? How do you see it working out?
Okay, for us, we've always held that The CBN should not be a development bank.
What are the development banks doing?
But the CBN is fully transitioning into a development bank. The primary objective of the CBN is to maintain price stability.
Yeah.
And that means, inflation must be within your targets. What is the target for inflation in Nigeria? 6 to 9%. We're at 11%, right? And that means we need to do more. And whilst we note that, we also note that currently monetary tools are inadequate to completely bring down inflation, right? We know that the presidency or the fiscal authorities also have to play their part in bringing down inflation. For instance, the insecurity we mentioned earlier on the show that is affecting food inflation, it's something the CBN cannot really fight using its monetary tools. So you need the fiscal policy or the fiscal arm of the government to actually take care of those issues. So for us, in terms of government, in terms of the CBN's intervention in key sectors, we think it's fantastic. We need to revive growth. We need to boost employment. Right, it's really the approach that we find, very concerning. Yeah, very so you find that the administration of some of these schemes, are suspect, and that is why once they are, poorly administered, the kind of effect you see, you might not get them. For instance, I'm going to use an example of the anchor borrower scheme. Yeah. The media has taken the liberty to investigate out that scheme has worked out, right? So you find that apart from for analysts, we do not have any data to rely on the CBN's intervention. So that data is not publicly available. So one of the things we think is those should be publicly available. Now, in terms of administration, some rather than go through the banks, the CBN doesn't go through the banks. And what you find is repayment is very, very low. So a lot of these farmers actually take on the loans and think they are grants, and they never repay back. And if you look at local media, you find all this news everywhere. Now, there's another issue in terms of the strategy. The problem with agriculture, or the major problem with agriculture, is in terms of boosting productivity. Most of these initiatives are not actually targeted at boosting agriculture productivity. So even if you find a situation where people are planting more, they are utilizing more lands, and the value they are deriving per land is actually currently weak. Until we raise the value, farmers can derive on each hectare of land, then we're not really doing enough to boost agric productivity in that sense. Then finally, in terms of other issues, say for instance mechanization that has to be taken care of, you want to think in terms of the aging labor force even in agriculture, because the youths are not really, they are transitioning into the modern sectors. So those are some of the issues we really have with the CBN's intervention. Also, we just feel like they are poorly equipped to take on all these development initiatives in several sectors at the same time, right? Yeah. While leaving, what they should be focusing on. For us, that is not too good, and it's really a situation where we should have the CBN, shed some of this load and make the government start playing its part.
I like that. Nice analysis there. Microeconomic strategist with AfriInvest West Africa, Adedayo Bakari. Thank you very much for your time, breaking it down, letting us really see. Well, let's see how it all moves on. We'll keep a tab. Thank you so much for joining us on the show again.